This voice is taken from an article with the title, How to Analyze the Cumulative Impact of Multiple Events on the Economic Calendar, which has been published on TRADERTALKSNET. The economic calendar is a very important tool for traders that want to stay up to date with the latest economic data and news. This is because the economic calendar contains information about major economic events that can have an impact on financial markets. It is therefore important for traders to understand how to analyze the cumulative impact of multiple events on the economic calendar. The first step in analyzing the cumulative impact of multiple events on the economic calendar is to understand the individual events and their potential implications. This includes understanding the economic indicators that are associated with each event, as well as any potential correlations between events. For example, a strong employment report could have an impact on the US dollar, while a weak retail sales report could have an impact on the euro. It is important to understand these correlations as they can help to identify potential trading opportunities. The second step is to consider the potential impact of each event on the financial markets. This includes looking at the historical data to determine how each event has impacted the markets in the past. This can help to identify potential patterns and trends in the markets. It can also provide insight into how the markets may react to similar events in the future. The third step is to consider the cumulative impact of multiple events. This involves looking at how the events interact with each other and the potential implications of each event. For example, if a strong employment report is followed by a weak retail sales report, it could indicate that the economy is slowing down. Conversely, if a strong retail sales report is followed by a weak employment report, it could indicate that the economy is strengthening. It is important to consider the overall implications of multiple events on the financial markets in order to make informed trading decisions. The fourth step is to analyze the overall impact of the events on the financial markets. This includes looking at the short-term and long-term implications of the events. It is important to consider the potential impact of the events on the currency, stock, and bond markets, as well as any related sectors such as commodities and real estate. It is also important to consider the potential implications of the events on the overall economy. Finally, it is important to consider the implications of the events on the overall sentiment in the markets. This includes looking at how the events are being perceived by traders and investors, as well as any potential changes in their behavior. This can be done by looking at news articles, investor sentiment surveys, and other indicators of sentiment. By following these steps, traders can analyze the cumulative impact of multiple events on the economic calendar and make informed trading decisions. It is important to understand the individual events and their potential implications, as well as the overall impact of each event on financial markets. Additionally, it is important to consider the overall implications of multiple events on the economy and the potential sentiment in the markets. By doing so, traders can gain a better understanding of the markets and make more informed trading decisions.